Good afternoon, everyone. Anthony Alaka with Torrey Hills Capital. Welcome to the Vizsla Silver Webcast for November 4th, 2024. Hope everyone's doing well. Hope everyone's prepared for tomorrow's vote down here. Thanks for taking the time to join our virtual lunch. Very pleased to give everyone an update on Vizsla Silver. So many positive developments have happened with the company, with more upcoming milestones on tap for the remainder of 2024 and beyond. Just to refresh your memory, Vizsla Silver is a well-funded Canadian-based mineral exploration company focused on its flagship Panuco Silver Gold Project in Mexico. The Panuco project has emerged as a Tier 1 asset and has grown to become a very large-scale, high-grade project in an excellent mining jurisdiction. The project has shown some of the highest grade silver intercepts in Mexico in recent years. Company trades on the NYSE American and on the TSX under the ticker VZLA, currently trading with a market cap of only about 550 million US. Very solid balance sheet, continued potential to grow an already huge reserve, and they just announced a PEA recently with exceptional economics. We feel there's plenty of upside in the stock, especially with silver at these levels. And the outlook for silver remaining positive. With us today to discuss Vizsla Silver's operations and growth strategy going forward is the company's Senior VP of Business Development, Mike Pettingell. Mike, it's great to have you on today. Thanks for taking the time to bring our viewers up to speed on Vizsla Silver. It seems like every kind of couple weeks we take off, you guys come out with some more exciting news. So I'm so excited for you to share the developments with our group today. Before we get started, I just want to mention if you have a question, type it into the Q&A or chat box. If you can't do that, raise your hand and I will unmute you so you can ask Mike directly. So with that, I'm going to turn it over to Mike Pettingell. Mike, the floor is yours.
Excellent. And thanks, Anthony. It's always a pleasure to be with Torrey Hills and really telling this fantastic story. So Vizsla Silver, we're listed on both the NYSE American and the Toronto Venture Exchange. Well, that's going to change here shortly under the ticker VZLA. And the reason I say it's going to change shortly, we just announced conditional approval for graduation to the big board. So we'll be moving up to the Toronto Stock Exchange here shortly. I will be making some forward-looking statements today. So as always, if any of you have heard the presentation before, or if it's your first time, we always like to highlight right off the bat Vizsla's vision. Because most of the time you'll have an explorer developer co, which is what we are, that just stays within that lane. They're really good at exploring, and so they do their best to outline a project, and then one of the major producers comes along and buys it, right? They're really good at producing, and they've got the technical bench strength that's really focused on developing mines, right, and operating them. Well, here at Panuco, our flagship project, we've got that rare opportunity where the initial capital hurdle is low enough, the exploration upside still exists, and we have that bench strength where we can actually push this forward ourselves. And that's really where you're going to realize peak value. And I'll get into that throughout this presentation. So it's really Vizsla's vision to become the world's largest single asset silver primary producer through the organic exploration and development of our flagship Panuco district, located in Western Mexico. And all of this will serve first silver in 2027. That's the big goal. So leadership, it's arguably the most important asset any company has. Mike Connor, he teamed up with our chairman, Craig Perry, sort of back in 2017, and they transacted on a cobalt deal. It's a very quick transaction in less than 12 months that allowed them to then go and incorporate two companies. One, Vizsla Resources at the time, hunting for copper assets, it's now Vizsla Silver, as well as Inventa Capital, Inventa being the private parent umbrella to Vizsla Silver. There's about 12 to 15 companies within that private parent umbrella. It's much like an incubator, shared back office services, all separate management teams, but really it's covering the commodities the world needs for the electrification, right? That energy transition. Most recently, we had Simon Smirlik join our group as Chief Operating Officer. Simon, he's been sitting with Ausenco Engineering for the past 15 years as Chief Operating Officer. Many of you on the call will be familiar with Ausenco. It's arguably the global leader in developing, commissioning, constructing mines all over the world, with a notable preference to Latin America. Simon was involved recently in the build of Silvercrest Las Chispas project, which is located just up the road, and it's a world-class single-asset silver primary story. Simon's built over, I think, 42 mines in his 30-plus year career. He's been with Vizsla since inception as the first independent director, and he's been the chair of our technical committee. But as part of him leaving Ausenco, he's now stepped into this role of chief operating officer for Vizsla, and he's tasked with really leading this next chapter of development and ultimately into production. On the exploration side, we've got Dr. Jesus Velador. He's a PhD in epithermal deposits, which is the exact type of mineral system that we have here in Mexico. So it's vein hosted, it's near surface. Jesus is a Mexican national. He's worked at every major company and country. Notably here, you can see First Majestic and Fortuna. But he supported Dr. Peter McGaw in the discovery of the Valdecañas vein at Juanicipio. That's Mag Silver's project. Now, of course, Peter McGaw is on Mag's side. Dr. Velador, Jesus here, he was on the Pettingell side. So now that we've got Jesus and Peter back together, Peter's an advisor to Vizsla. We've really got the best of the best when it comes to silver discoverers under one roof here. Lastly, Eduardo Luna. He joined our group officially in October of last year. He is a true senior statesman when it comes to Mexican mining. He's a Mexican Mining Hall of Fame member, former president of the Mexican Mining Chamber. He sits on the board of Core Mining. He stepped down from the board of Wheaton Precious last October to join Vizsla. It's part of their succession planning. But really, when you look at his CV here, beyond Wheaton, Peñoles, Goldcorp, Looseman, Alamos, I always like to say that these are premier companies that have one asset in common, and that's First Majestic's flagship San Dimas mine. It's a project that's been in commercial production for over 150 years. It still does about 13 million ounces per annum, but over that 150-year time period, it's produced right around 1 billion ounces of silver equivalent. When you contrast that to what we have at Panuco, where we've had 0 years of commercial production, and it's a direct analog, geologically speaking, now you get a sense of the size of the prize. 1 billion ounce district in the same host rocks located 80 kilometers as the crow flies, versus our project where we've already outlined almost 400 million ounces of silver equivalent and haven't started mining anything. So really 3 key reasons, and I'll rehash these later on in the presentation. The investment thesis here is we've got a fast track to production. We've got a feasibility study coming out in the second half of 2025, and that'll be followed by that construction decision to put us in that position to pour first silver in the back end of 2027. We're well funded to do this. We've got almost 118 million Canadian currently in the bank, with another 16 million in the money warrants that expire the end of this month, in fact. We also have no debt. It really allows us to take all the way through the operational objectives that I'll outline in this presentation here, straight through to project financing. And we're focused on de-risking. As you'll get a sense throughout this presentation, we have so much exploration upside. In fact, the PEA represents about 8% of the known veins we have in the district. And they're all open. We can continue drilling and diluting and drilling and diluting, but it behooves us as well as shareholders to get into production as quickly as possible, and then we can explore the rest of this vastly underexplored district with free cash flow. So that's really our intent. And so one of the key points of de-risking is our bulk sample test mine that we're fully permitted and fully funded for. We're going to initiate that here sometime later on in December, and that'll take us, the results of which will feed into the feasibility study. I keep on saying exploration upside. We've got a really big land package. It's about the size of the island of Manhattan, and we've tripled that this year so far. Really, again, setting up for multi-generational pipeline of assets to discover here. And the district, the contiguous package that we currently have, we've only mapped about 70% of it. We're still finding historic workings, which lead to new mineralization because these old timers, they just couldn't go below the water table. So still tremendous opportunity within our contiguous package beyond what we're talking about in these multi-generational pipelines. And we're growing responsibly. We've got local ejido groups. And now in Mexico, these local ejidos are the local land owning communities. They are not indigenous, but they do have elected officials and they provide access and they'll actually allow you to push your project forward in country. The company, mining company, so Vizsla itself owns the subsurface mineral rights, but it's these local land owning groups who own the surface rights. We've got 5 ejidos that cover our district, and we've got 30-year operating agreements with all 5. So this is really a testament to our social license here in country. We continue to invest locally. We hold health fairs and community fairs that allow for these impoverished communities to access goods and services where they might not be able to. So to the project itself, we're about an hour drive along one of 2 highways from the coastal city of Mazatlan. Mazatlan's got about 1 million people in it. It's very much where the Mexican middle class go for spring break. So it's a tourist city. You've got deep sea ports where the cruise ships can pull up. You've also got rail that runs the coast. International airport right here. Again, you're about 15 minutes outside of the city. It takes about 45 minutes from the airport to get to our project, where you've got daily flights coming from places like Toronto, New York, and of course, Vancouver, where I'm located. In addition to the infrastructure mentioned, these green lines, arguably the most important, these represent high tension power lines. If you go back and look at Mag Silver, Silvercrest, these are 2 names that you're going to hear me repeat quite often because they are the premier single asset silver primary files that exist today. Well, Silvercrest has now been acquired by Core, and I'll touch on that as well. Power was the biggest impediment to them reaching not only initial, but also commercial production. Gensets, alternative power sources, that had to be employed until they were able to tap into grid power. Well, we've got the power lines that go right directly over our proposed mill site location. It really sets us apart in terms of that initial hurdle. So excellent infrastructure. This is a past producing district. So, discoveries date back all the way to the conquistadors in this district, but it's never been mined commercially or mechanized. And again, that's what creates an excellent opportunity for Vizsla and its shareholders to come into this district now. It suffered fragmented land ownership. So for us to come in, piece it together, and now systematically explore with the ability using technology to go below that water table I mentioned, everything remains open for us. And that's exactly what we're looking to exploit here. This also just goes through some of the infrastructure. Suffice to say, this is a very mining-friendly jurisdiction where you've got generations of miners. Concordia here, you've got about 75,000 people in this city. This is where our facilities are located, our 7 core storage facilities, as well as where our accommodations are situated. But again, because of that previously disturbed nature, or brownfields nature, when it comes time for permitting, the government, they really look friendly upon previously disturbed ground. It expedites that permitting process because you're coming in and taking on a liability and going to leave it far superior than the way you found it. So the PEA that Anthony mentioned, we published this in July of this year. This is truly a grand slam in terms of economics. So what you're looking at here are post-tax US dollar numbers. At an NPV5, we delivered a $1.1 billion after-tax NPV, an 86% IRR with a payback of just 9 months, and an incredible NPV to CapEx ratio of 5.1 times. I've got a slide on this next, and we're very challenged to see other groups that have this type of NPV to CapEx ratio. When we look, question?
One of the questions, how will how do you think, and maybe it's too premature to ask this, the feasibility study numbers will differ from the PEA numbers?
No, good question. And it is a bit early because we're still working on our resource update that's going to serve as the base for that updated technical study. But one thing, which is our mantra, we don't like to go backwards, right? We're focused on under promising and over delivering at Vizsla, and we pride ourselves on it. And one thing that I'm going to highlight here is this first few years of cash flow, where you're doing on average 250 million in post-tax free cash flow. We want to see this be pushed out, this high production profile pushed out into years 3 and 4, which will have a direct knock-on effect to your economics. There's a lot of other areas to optimize here, and I'll touch on a few of those as we go through the presentation. But really, what we did in this study is we went conservative. And I'll give you one small example. When it comes to ventilation for the underground mine, this is an underground mine. The ventilation, we didn't go and do design specific and optimize the fleet and the equipment choices. We went for the biggest, most expensive, implementation that we could think of. And it's basically one large, huge fan, right? You're not going to do that. It doesn't make sense to do that, but it was the priciest option. That is an opportunity for us to optimize and fine tune. That's just one example of an area that we were overly conservative on purpose, right? We wanted to get the study out and we wanted to show excellent economics that we know that we can improve on. It's the kiss of death when you have to start going backwards once your feasibility study is published. So the sensitivities to silver and gold, when we published this document, we used CIBC's long-term consensus pricing, $26 silver and $19.75 gold. Well, we've just discussed those economics, but where we're sitting today, it's somewhere in between spot and the upside case. Really, you're looking at triple-digit after-tax IRR. So this is really outstanding return on the capital. But that's fine, right? I know we're in a rising commodity price market. I don't want to discount that, but really, I like to look at what it looks like to the downside. And we could have these numbers by 50%, and you're still going to show positive economics here at Panuco. Really, this is a near surface, high grade project, and that is what's making this attractive economics that looks rosy in any commodity price environment. So here's that NPV to CapEx, where we're just sitting here in a low cost, high yield category, which really we're kind of out here on our own. I've mentioned Silvercrest a few times. Phenomenal project. It's a short-lived project, but it does tremendous economics, and it's very, very high grade. They had a 4x NPV to CapEx. Again, a truly remarkable project, but your overall NPV, I think it was actually closer to 400, so this might actually be a little bit off, closer to 400 million relative to the 1.1 billion that Panuco is showing. So the project itself, you can see it here, the original contiguous package, that's denoted where my cursor, I hope you can see my cursor here.
We can see it.
Perfect. And this is that size of the island of Manhattan. Again, we've acquired a large claim down below here, contiguous to the south, as well as another property, Lagar, up to the north, and I'll get into those in a little bit. The resource base that informs the PEA, we published this in January of 2024. It's contained here just in this blue hashed polygon, and this is the PEA. We do have 2 small satellite resources in the central portion of the district. We're not focused on those today. We'll get back in and we'll follow up on these because they are open for expansion. In fact, every structure, there's 11 structures that make up this resource. Every single one is open in every direction except for up because they're all right at surface. That really keeps those initial development costs low and keeps the operating costs low, as you don't have to haul things very, very far, right? And there's no rehandling either. But this resource, the data cutoff was actually September of 2023. We've completed almost 60,000 meters of additional drilling, 45,000 meters of infill, really focused just here at Copala, where the mine is going to be initiated, right? So the day that this PEA came out with these initial stope shapes, it was already largely obsolete. And I can't stress this enough. The PEA economics that we've already touched on and we're going through currently, it's just a snapshot in time. And we've already moved well beyond that snapshot. We have a very good sense of where this updated MRE that we're going to publish by year end is heading. In fact, data cutoff for Napoleon, this side of the project, has already been accomplished. Data cutoff for Copala here is fast approaching. We've completed our infill program that was focused on the first 2 years of production, and we've got one more round of results to come out. Should expect those in the coming weeks. We've now switched to doing some exploration drilling, but I'll touch on that a little bit later in the presentation.
Hey
So
Mike, how much additional drilling will be going from the PEA to the feasibility study? Like how, what can we expect in terms of that?
yeah, that's a great question. So the drilling that we've completed between the data cutoff of September of last year and now will be the new foundation for the FS. There could be a little bit of optimal drilling that we do to bring in some category conversion, but really our goal has been to hit 200 million ounces in the M&I category. And
Hmm.
again, for context, if you look right here, we don't have measured, we've got indicated with 156 million ounces. We're quite confident that we've hit that number. Again, data cutoff here is already half complete, and the other half is imminent in the next week or so, with no more additional drilling, right? It's just waiting for those assays to come in. The 200 million ounces in M&I, basically what you're seeing is grade improvement that's leading to conversion, as well as adding additional ounces, which is pretty rare to have additional ounces coming in through an infill program. It's just showing the high grade nature of this. As we reduce the drill spacing, you're finding higher grade centers and improving the overall grade profile. So 200 million ounces in M&I is what our target is for this upcoming resource. And really, when you talk FS, you're not allowed to include inferred. So that's why our focus has been on conversion drilling to get to those higher confidence categories so we can have an initial reserve statement in our feasibility. So this is all conventional mining, conventional processing. We want to keep things as simple as possible. There's no newfound technology that is mandatory to make this project work. This is all just well tried and true conventional mining, conventional processing. So it's a long hole bulk tonnage mine, predominantly 85%, with a small component of drift and fill, which is selective just to minimize any disturbance with this nearby town of Copala. And I'll show this in a better map. It's a 3,300 ton per day facility to start, with the potential to ramp up to 4,000 tons per day in year 4 as we go from Copala into the Napoleon side of the project. You can almost think about this as two mines, one mine starting at Copala, the second mine over here at Napoleon. This is whole ore leach, so it's very simple flow sheet of just crush, grind, and then we're going to leach the mineralization and then produce silver, gold, doré bars. We do have about 60% silver, 40% gold here in the economics, and that's the best way to think about things. The initial capital outlay is only 224 million. And again, this goes back to the layer of conservatism. Ausenco did our study. They came out with 20 million in contingency, which yielded a $204 million initial capital outlay with a $20 million contingency. We took that and we threw another $20 million on top just as an added layer of conservatism. So it's almost like an owner's contingency. We have a suspicion based on everything we're doing now that this could actually go down when we come to the FS. Initial mine life is just shy of 11 years. Again, this is a snapshot in time. Every bit of resource is open. So look for us to expand as well as fine tune these mining shapes and again push out this production profile.
Which
And the
was one of
all
the questions, Mike. Sorry to cut you off, but how long do you think you could mine at Panuco?
oh well, if this is anything like San Dimas, well over 100 years. We've got about 93 kilometers of known vein strike right now. And again, this represents about 8% of that vein strike. So we've got a tremendous amount of work left to do. And I'll go through some of our plans here later on in this presentation.
Thank you.
So sub $10 ASIC is the last thing to highlight here, which is, again, truly remarkable. And I'll put that into context in a moment. This is a new little animation that I've thrown in. So this will be the first for your viewers, Anthony. What you're looking at is just the satellite image of the overall project. And I'm just going to kind of cycle through and I'll talk to it as we go through. What we'll end up seeing here is this is the spatial distribution, yet again, of the resources. Now we're zooming in on project one, right? And this is what the PEA highlighted. Everything is contained within a 3.5 kilometer radius. That keeps all of your costs low. We have no roads to build. You can see where the plant location is here and the power lines that run right over it. This is what the underground workings will ultimately look like. So if we zoom in on the initial pre-production development, as well as where the bulk sample location will be taken, you can see we're about 600 meters from an ore source. Now in year 4, we head into Napoleon. Now this is 7, and then 7 to 11. You just get to see how it cycles through. All these purple stopes represent the bulk tonnage, so that's long hole, where this orange represents that drift and fill. Again, that's just below where the town is located. So here's a 51-ton truck that we're going to use for our bulk sample. The bulk sample will then come up. We're going to stockpile on surface. And then you're hauling just a short distance to the plant location. Again, this is very basic. So it's 3-stage crush. And then you're into your grinding and leaching and CCD. Then you're going into your actual refining where you're going to pour those silver and gold doré bars. And then you're pumping actually to the TSF. We don't have to build linear infrastructure. And that's basically what this profile is showing, that this topography is downhill. So it benefits us to go to our contained watershed over here. And so, you know, you're 2.5 kilometers to get to the TSF pumping. Again, very limited linear infrastructure. We've designed this mine in such a way where you will not know there's a mine here. The only thing you're going to know is the economic benefits that this mine is having. You won't see it if you're riding on one of these two highways, these two black lines. You won't see it if you're in the town of Copala here, which is denoted by this orange buffer. All you're going to know is the economic benefits, which is truly remarkable. So what does it produce? On average, over the life of the project, you're producing 15.2 million ounces of silver and gold per annum. But in those first few years, which really are driving those project economics, you're producing over 20 million ounces. This is exactly what we're intending to push out into years 3 and 4, which will have an excellent knock-on effect to the time value of money and our total project economics here. And so that's exactly what we're looking to do. And then you're pushing out Napoleon. Again, all of these resources are open in every direction. And so if Panuco was in production today, based on the PEA numbers, well, it would be a top 5 silver producer right here. The only projects that are in front of it are actually held by the world's largest silver producer, Fresnillo. And Juanicipio, I referenced that early on. Again, our VPX, he discovered this with the help of Dr. Peter McGaw. Well, on a wholly owned basis, because it is a joint venture there at Juanicipio, Juanicipio does sit just barely as the largest silver producer on the planet. Silver primary producer, I will say. If we are just looking at our first few years, though, you can see we're the number 4, right? It's with significantly reduced cost profile. In fact, these are 2023 annual production numbers. You're looking for our annual, or excuse me, for our life of mine ASIC. You're looking at about 50% lower cost base than what the average for 2023 production is.
Well, one of the questions, Mike, that came in is once in production, which company will you most be similar to in terms of valuation? So, which, you just pushed, is that what you just, that one? Yeah.
Yeah,
Um,
this one probably wouldn't be in terms of valuation. We used to say Silvercrest. It's we're just far larger. You can fit, I think, six Silvercrests in our project. So it's not a Silvercrest. It is more of a mag, but on a wholly owned basis,
yeah.
right? Because mag only owns, I think it's 44% of the project. They don't control their own destiny. They can't go and explore and drill some of their high priority targets without Fresnillo signing off. And so that's a big differentiator between us and them. There's not many comps, and I'll get into some of those more comps on the overall equity later on in the presentation, but there's just few and far between that can rival the production profile. And then when you factor in the economics, the overall equity valuation.
Yep.
And look, this slide helps. Just talk to that point. There's just not a lot out there. There's not a lot of quality when it comes to silver primary, and there's even less that's to come online in the future. And I was waiting for a long time to be able to highlight this slide, but this is showing from 2024 to 2040 how limited the space really is. You've got 1, 2, 3, 4, 5, 6 assets besides Panuco to come online. Now, these are assets that produce over 5 million ounces, and it has to be more than 50% owing to silver, so a true silver primary. But when you average all of these, 6 other assets, you're looking at about 9.3 million ounces. That's almost half of what we're planning to produce per annum. So it really does go to show that there's a limited amount of quality and the impact of the necessity that the space needs. It needs Panuco. And it will have a direct impact on the silver space as well as the overall precious metal space. So the PEA highlighted a few areas, key areas for enhancement, and I've touched loosely on a few of them. One, of course, the tight space drilling at Copala to really explore these open-ended resources. We've now completed that program, and we're now switching over to that discovery-based drilling. But we did know that these stope shapes were just not they were not optimized, given we were having tremendous success with incredibly high grades just outboard of the resource boundary or outboard of those initial stope shapes. So look for those to be optimized in the FS, and of course that production profile to be expanded in the first few years. We're now on our 4th round of metallurgical test work. Yes, you heard me correctly, 4th round. At a PEA level, you usually have 1 round. And so again, I'll put this into context. Vizsla focused on developing, building, and operating this mine ourselves, right? We're not trying to, put a bow on this project and sell it to the highest bidder. So therefore, we're not cutting corners. We're doing everything right to ensure that when we go to build it, it's done right. And metallurgy is one of the most important things you can do as far as de-risking. So 4th round of metallurgical test work, our PEA cost us about $2.5 million, where your average PEA costs around 300 grand. So again, above and beyond what is typically required for this level of study, because we're skipping over the PFS stage to go right into feasibility and achieve that first pour by 2027. We want to capture this time value of money this cycle. So Optimized Met is really focused on those incremental trade-offs, knowing and identifying if the juice is worth the squeeze to bring in the float circuit potentially in year 4 and expand for Napoleon. It's really design specific stuff that we're focused on. We're also optimizing the mine design, the fleet, and the scheduling. This harkens back to that ventilation I mentioned. There's a lot of areas that we can optimize based on newfound dimensions, understanding exactly what those stope shapes are, and sequencing them that it's going to deliver the best return on the capital invested. And also further optimizations to the tailings and water management. We've done a fantastic job in terms of trade-offs, identifying the location, but there's still lots of work that we can do to optimize the overall flow. And one thing we're focused on right now, where we do have a slight positive water balance here, is ensuring that we can source all of our water needs from the project area and not have to bring in any additional water from outside, or source any water from the local rivers and streams. Right now, we're pumping water from underground, historic mining operations, or we're using surface capture. And that's what we want to go forward with the in the FS. So arguably one of the most important, and I've talked on it quite a bit, is that infill drilling. Polygon that's blue and the red polygon represent years 1 and 2 of mining respectively. You can see here over 4.2 meters, grading just shy of 9,000 grams per ton. These are the types of intervals that we had in our infill program as we reduced the drill spacing. That's really making these stope shapes obsolete, right? And so look for these to be expanded laterally as well as closer to surface. So bringing mineralization closer to surface, we found a historic adit here, again, pointing to that direction of old timers mining, where we know we've got mineralization. So Copala, the town is up here. We've got absolutely outstanding grades and width up in this area, but we can't drill under the town any further here. You know, it's just, they're ugly angles. So once we're underground, we'll start drill testing this from better positions. But you've got up to 82 meters true thickness in this area here. So, you know, really big, wide widths of high-grade mineralization that we want to continue to chase after. So everything I'm talking about is really focused on Project 1, everything thus far, right? We do have this dual track because of the tremendous exploration upside potential here. It's just such an underexplored district that we could be drilling, as I said, until we're blue in the face, but it makes a lot more sense to get into cash flow, and then we can turn this project into Swiss cheese without being dilutive. So first step along the way for Project 1 was delivering the PEA, of course, getting that social license tucked in and completing that conversion drilling. That's all done. We're going to submit our MIA application, which is our big permit here. That's very much your environmental permit. That covers the area of influence, the birds and the bees, your water discharge, all of those really important things. That'll be submitted here later this month. Statutory time limits are about 6 months. We don't necessarily believe in those. We expect it'll take about 12 months to receive those permits back. Even if we receive them by January of next year, we'll be in a good way to still have first pour in the second half of 2027. But that permitting process is the first step along the way to really start the de-risking. Resource update I've talked at length about here, targeting Q4, 200 million ounces in the M&I category, sets us up for initial reserve delineation. The bulk sample test mine. Now, this is to a few things. It's not to generate cash. This will start at the Copala portal. We'll go down basically where you saw that animation in the truck, the little truck located. And the plan is to take 10,000 tons initially. It's really to support initial reconciliation to the block model, so we know what we have is where we have it. Also, ongoing network on a bigger, broader sample. But the real reason here is to get underground, get our hands on the mineralization, understand our pumping rates, our mining rates, our ground support conditions, and of course, our ventilation. All of those really important things that you need to understand before making a mining decision. But once we receive those permits, it's our intent to continue mining once we're underground. So this bulk sample adit will become main mine access for us. Other groups have done this in the past and had tremendous success just shortening your timeline. But arguably, the most important de-risking element of this is decoupling the risk associated with mine and mill, right? Because if we can stockpile 1 million tons on surface before we turn on this mill, well, any growing pains associated with commissioning will have the mineralization on surface. Or if we run into growing pains in the development, opening up the mine itself and having those faces that could feed the mill, well, we'll realize that before the mill's ever turned on. There are far too many cautionary tales in the mining space, even of recent times where there wasn't enough mill feed to feed the mill. or vice versa, and then you ran into cash flow issues. Ascot is a perfect example, and many of you will know Ascot on this call. So the results, of course, of this bulk sample will feed in the feasibility study that we're planning for the second half of next year, and again, all with the goal of producing silver in the second half of 2027. That's going to support our exploration efforts following cash flow. But right now, we can still employ low unit cost methods to help really guide in our targeting. So, we've got ongoing discovery drilling right now, a 10,000 meter program. Excuse me. We've recently acquired multispectral satellite imagery across our entire district and are collecting TerraSpec data. TerraSpec essentially is just a way to identify the alteration minerals that you have in your drill core. And the alteration minerals are important because they can identify where a heat source is. I don't want to get too in the weeds on geology here. I am a geologist and an engineer, but essentially this type of system, you have a heat center that drives the hydrothermal fluids where you have boiling zone where you precipitate out those metals. Those heat sources are identified through clays. Sorry. Got a tickle here. So we're essentially building a map to identify where those heat centers are. We've also made accretive property acquisitions so far this year that's effectively tripled our land package. We're not going to get going on testing these targets tomorrow because we're going to wait till we're in cash flow. This is really just highlighting our competitive advantage in this district when we pick these assets up at the bottom of a market. We also have ongoing mapping and sampling, the implementation of this data, especially the spectral data. And we're really focused on finding project number 2. And that's what these blue ellipses represent. The PEA here in the blue ellipse in the corner, again, still open-ended resources. With the orange ellipse here, those are proximal, or those targets that if a discovery is made, you're within haulage distance to the centralized facility. But when we look out over here in the east, this is where we're focused on now. We've moved the drill rig here. We've got about 50 meters already cut. Second drill rig is moving to Camellia down here, where we've got all the hallmarks that made the Southwest here so successful. Same host rock, same structural preparation, historic workings on surface with cross-cutting structures that could really signify a zone of dilation, right? Or pooling of mineralization. So very excited about the potential of these targets, and I can't stress this enough. These are not targets that we could make a 5 to 10 million ounce discovery where we would haul it over here. These are the 30 to 50 million ounce potential centers where we could find a new center that could warrant its own standalone facility. So these are our biggest and best targets. Again, just getting the drilling underway. Look for these results to start trickling out towards the end of the year. And this is again touching on those other property acquisitions. We just announced in the market last week the closing of Lagara here. Lagara, very, very interesting. It's essentially Panuco 2.0. It has past production dating back. It's been in private hands since the 40s, and it's never had a diamond drill hole poked into it. That's really remarkable and attractive to us. We've sent our geologists up there for about 2 weeks. They mapped and sampled veins that are reminiscent of Napoleon, so about 2.5 kilometers long, 5 meters wide on surface, but also near flat-lying structures similar to Copala, where Copala averages 10 meter width throughout the mile length of its overall strike. So again, very excited at the potential here, and we picked both of these properties up for about $7 million in cash and shares spread over a 3-year period. So excellent tuck in at the bottom of the market. And this slide a bit promotional, but it really just highlights the scarcity of this type of system. Big silver primary deposits that are over 1 billion ounces in a district They just don't exist. You've got 14 of them on the planet. 8 of them are in Mexico, and 5 of them are the exact same style of deposit that we have. What we found to date really points to the fact that we are on one of these potential billion-ounce districts. This slide was actually taken right from Peter McGaw. We've got about 100 million ounces of historic production. We've outlined about 300 million ounces just in the West. Statistically speaking, for us to have found the best of the best right off the bat is very, very low. Again, we've only mapped 70%, where we're still finding historic workings, which represent excellent centers to drill. So what does the re-rate potential look like, right? And this was asked earlier on. We really like to look at PNAV multiples, especially now that we have an economic study out. The average PNAV multiple for a developer or explorer in the silver space hovers around 0.4, right? 0.35, 0.4 times. Vizsla trades at a bit higher than that because high grade, right at surface, very large resource, right? And it's previously disturbed ground. But when you look at the average producer at trading at PNAV multiples around 1.25 times, it really does highlight that it behooves operators here or explorer developers to go into production if you're silver primary. This is that elusive silver premium. And again, it's largely afforded by that scarcity slide I just highlighted. So that's one element. You know, you've got about a 235% increase just by de-risking your project, getting permitted, building it, and getting into production, right? But also, when we look at these precedent transactions of First Majestic acquiring Gato Silver September 5th, and Core acquiring Silvercrest early last month, the implied PNAV premium, well, you can see it here, on average is about 1.85 times. If you were to apply that same multiple to Panuco and Vizsla, you're looking at about a $2.3 billion company. These are US dollars, right? So it's a phenomenal re-rate where we're trading at close to 500 million today, a phenomenal re-rate just by going into production. That's one element. But the other element is, you know, our likeliness to actually do this, right? Well, we've got a capital outlay that's about half of our current market cap. I'm challenged to find another group that's got anywhere close to that type of MPV to CapEx ratio. In fact, most corporates need to raise 2x their market cap just for drilling. We're just not in that case. And with the current balance sheet of over 100 million, well, that represents quite a big portion of our project financing. The way we're looking at project financing is 60-40 debt to equity split. And again, straight plain vanilla. We're already moving forward with a group of lenders under CA. We want to have term sheets in advance of the FS so that we can significantly reduce the cost of the equity capital. So the key potential catalysts over the next 12 months. I've mentioned the bulk sample test mine, fully permitted for 25,000 tons. We're only going to take 10,000 from Copala. Again, this is focused on stockpiling, not generating cash today, so we can decouple the risk from mine to mill. We've also got the results from the optimized met. This is really fine-tuning things so we can squeeze out a percentage or two more recovery, which does translate into significant bottom line. It's also on the vendor and design-specific testing, so we know exactly what we have to support these process units. The updated MRE coming out in Q4, again, 200 million ounces in M&I. You'll see about a 20 to 30 million ounce measured component. That represents year one of production at Copala. Again, all this is going to feed into that feasibility study. We're targeting the second half of 2025, but internally, we continue to say the summer of 2025, just like our PEA. And the kickoff has already been started there. We're using Ausenco, Mining Plus, and SGS will do our resource. But those are all milestones, in my opinion. The real catalyst here is this last one, this ongoing discovery potential. You know, if we make a discovery out there in the east, I think you'll see a gap up in valuation right away. It could be $1, it could be more, because that's just showing now that you've got a second center of mass. You've got a second, project to start pulling from and derive a cumulative NAV. So very, very exciting potential there to get underway. And if you see us make some success, I would imagine that we would expand that exploration program, which would be warranted. So to summarize here, the 3 reasons to own Vizsla, it is fast track to production. We are an advanced developer that's well funded, focused on de-risking. We're laser focused on this. We're not going to go and just start wildcat drilling here and wasting money. It is laser focused to get into production, and then we can do a lot of things, special projects and testing, the thesis to find more. But there is an immense amount of exploration upside, and we're trying to ring fence as much of this as we can when no one's really looking. Again, 67% mapped. We've got over 170 targets. Lots of news flow to continue coming from Vizsla Silver. And we're timing this really well. When we published the study, it was $24 silver as long-term. Well, those are above $30 now. Spot trading around $32.5, $33. And there's all sorts of speculation pointing to a rising commodity price. And when we look at these PNAV multiples, there certainly is the silver premium that we're focused on attracting and maintaining here, the likes that not all producers can do. And we are in the right position to do this with, strong catalysts in front. In fact, it's always our intent to have 8 months out, a strong catalyst for the investor to sharpen their pencil on. And of course, be always having something to look forward to on the horizon. So with that, I'm happy to open it up for questions. I've got lots more in the deck if anybody wants to talk something specific, but we're well covered by the analyst community. Top shareholders are certainly on the institutional front with Franklin Templeton and the whole Sprott organization. But I always like to say, management, insiders, directors, we are allergic to dilution because we do hold about 15% of the outstanding shares of the company.
Yeah, and I've been buying some of the stock, recently as well. So, I mean, the management team has certainly put their money where their mouth is, for sure, and they have a lot of skin in the game. So, you have an opportunity to own alongside the management team. I want to open the floor for questions. We already have a bunch in queue, so if you have any questions, please type them into the Q&A box or the chat box. So, Mike, some of these you've kind of already covered, but maybe if you can add a little bit to them, if you think if you think you can add a little bit more color. But first one, is mining tougher in Mexico based on the last and newly elected president?
Would it be tougher? I would say no. There was certainly projects permitted under the AMLO administration. Claudia's only been in office officially now for just about a month. But we've already seen some permits come through, right? Notably, Mag Silver received a permit for their tailings facility, right? And their TSF is basically the same size capacity as what we're going to come out in permit here. So that's a really good indicator. Things are moving in the right direction.
That's great. Are you saying that you could add another 40 million ounces between now and the feasibility study? You had 156 million up there in the indicated. You think you could go to 200 million? Is that the goal?
Yeah, I mean, we'll go to 200 million in the indicated category, so M&I category. Again, we don't have any measured now, so M&I is its own category here. But yeah, sitting at 100 and what does it say here? 156 total. That's what we're going to expand to 200, but you'll convert some of this. So you're converting some of the inferred. The way it works is you'll have 100-meter spacing to be classified as inferred, 50-meter spacing to be classified as indicated, 25-meter spacing to be classified as measured, right? So as we're reducing that drill spacing, that's how we're converting. But because of the high-grade nature, we're actually adding ounces. So although this program has been infill, you're going to see a good bit of conversion to get to that 200, but you'll see overall resource growth as well. I don't know how the sausage is necessarily made or how the pie is divvied up right now, but I do know that that's the target, and we're quite confident we've achieved that.
Great. What is the biggest issue the Mexican government has with mining? Is it more jobs, economy, or is it more the environment?
Yeah, that's a great question. It's kind of both, right? Claudia's 3 points were focused on food insecurity, water and the access to it, and overall economy, right? So jobs. So those three things. So you're looking at the environment in the terms of the water, which is really good for us because we've got a positive water balance here. We're not looking to exploit any water. In fact, we'll create better water for the local communities as part of our initiative. And as far as food insecurity, well, we don't have any call it farms or any residents that we're displacing. There are some subsistence farms in and around our area, but what we'll look to do is support them and start growing more corn as one of our focus. And we do have. I've said this before on some of the calls. We've got Fernando Bertigue here as our environmental social advisor here. And Fernando's uncle was actually just selected as the Secretary of Agriculture for Claudia's cabinet. So we do have a bit of a line into the administration. His uncle actually went to school with Claudia. So we've got a good sense on initiatives that could support, what the government's outlining.
Gotcha. What is the outlook for silver supply versus demand?
Yep, this is a classic one. Supply and demand. Well, I showed you the bubble chart, right? The supply is not really there. Quite often, you also have silver supply coming on from big, large open pit deposits like copper porphyries, for example. Those are predominantly in Latin America or South America, Chile, Argentina, Peru. Those countries, basically since COVID, have had a really hard go in terms of mining regulation, mining finance. These projects are huge. They've got large capital outlays in the billions. And of course, environmentally speaking, they're a nightmare, right? So they're fewer and far between getting permitted and coming online because of those facts. That's why you're seeing a dwindle in the silver supply, whereas the demand continues to outpace, largely driven, of course, and we're pointing it here by photovoltaics. It's making up a large component of the overall demand, and now we're on year 4 of this deficit.
Great. So I'm going to tie these two questions into one. But one of the questions is I like the 60/40 financing strategy for future capital needs. I know it was mentioned in the stage of capital needs. Will there be options and warrants? And also, someone asked, is it too early to be talking about the financing of the project? I know you touched on that earlier. So can you talk about how you're going to achieve that CapEx?
Yeah, absolutely. So there will be no more warrants. The last unit deal that we did was in, God, it would have been 2022, the fall of 2022, and that's what the warrants that expire this month are tied to. They have a strike price of just under $2, right? So we've moved away from all unit deals. We don't intend to do any more. With respect to the project financing of 224 million, 60/40 debt to equity. It's not too early to start talking about that. In fact, we've had about 6 groups under CA since before the PEA. We've brought them down to site. In fact, we already have term sheets in hand from notable European and North American banks. Again, this is plain vanilla. We're not trying to get cute with streaming
Hmm.
or royalties or any of that stuff. This is because of this rapid payback, because of the high grade nature where you're just throwing off over $250 million in free cash flows for the first 2 years. You'll take on that debt, but we want to minimize the risk. There's always risk, right? And that's why the 60/40 debt to equity split exists, right? So reduce that cost of equity capital as much as possible by already having the term sheets in hand.
Questions. What is the 100 million in the bank earmarked for?
Yeah, great question. So that is to get us through all of the operational objectives I've outlined. So delivery of the resource, right? Delivery of the bulk sample. So development of the bulk sample, and of course, going through all of that. It's going to take us through this 10,000 meter exploration program. There might be some more additional infill that occurs next year. You've also got the ongoing MET study and delivery of your feasibility. So all of that will really be satisfied through this. And then, of course, as I mentioned, if we do have exploration success, well, we can turn on the drill rigs very, very quickly and get back up to 13 drill rigs spinning like we had last year.
The question I had was, are there any royalties on Ligara?
Yes, I believe there is a small royalty to the vendor. I can't recall exactly what it is. It's either 0.5 or a 2%.
Okay. And last question was, what is your main concern going forward, if any?
Yeah, that's always the tough one, right? There are two things that concern management the most. Um, Typically our CEO says access to capital,
Hmm.
not running out of money, right?
Right.
But that's where we stand now. That fear is largely, quenched.
Yeah.
But permitting is always a big one. It's a bit of a black box, and you could do your best to get your ducks in a row, but it's kind of out of your control at a certain point. We're working with some very, very good consultants in country that all they do is permitting. That's all they do. And so we've set ourselves up for success here, and we're very hopeful given what we're seeing with the new administration. So I would say those are the two biggest for us is of course running out of money and not receiving the permit.
Perfect. And it seems to me that you got a really good handle on the money, obviously, and I think you will not have any issues with permitting. So, I mean, you guys have done an amazing job of de-risking this project. And every month, it seems you're coming out with some new development with this, which has de-risked it even further. So, you guys are doing a phenomenal job. We're going to wrap it up there. I want to thank Mike Pettingell for coming on and getting everyone up to speed on Vizsla Silver. Certainly now is the time to take a look at the company. A little dip in the stock recently, so I consider that definitely a buying opportunity. Mike outlined all the recent anticipated milestone announcements, opportunity for re-rating. So, we look forward to following the company in the future. As always, Mike, any parting words for our guests before I wrap it up here?
Yeah. Thanks everyone for attending. Exploration isn't our DNA. This is what an exploration story that's successful looks like. I'm putting on the discovery hole that started it all here, 8,000 grams per ton over 6 meters true width. I think we've got a lot more of those in store
Yeah,
now that we're starting to get over to the central and the eastern portion. And that's just contiguous. We're not talking about San Enrique to the south. We're not even talking about Ligara.
yeah. No,
There's a lot of room for discovery here.
yes.